In the third quarter of 2025, a financial earthquake quietly shook the global markets, but almost nobody noticed it. It didn't break the news cycle. It didn't dominate social media. It didn't trend like a celebrity scandal or a viral meme. Yet behind the scenes, something happened that could shape the financial future of millions of people. While American investors celebrated another record high year for the stock market, Chinese billionaires were doing something very different. They pulled out more than $47 billion from US stocks. And they didn't reinvest that money in China. They didn't put it in Europe, or in crypto, or in real estate. They took that money and moved it into physical gold. Real, tangible gold, stored in private vaults in Switzerland, Singapore, and Hong Kong. To most people, that sounds like a random move made by rich people who shuffle money around all the time. But if you look closely, the pattern behind this move is nearly identical to what happened right before the 2008 financial crisis. Back then, the world assumed everything was stable. People were buying homes they couldn't afford. Banks were handing out loans like candy. Politicians were promising endless growth. Meanwhile, Chinese elites quietly started selling US assets. They didn't shout about it. They didn't go on TV. They didn't warn anyone. They simply moved their money. And 18 months later, the United States plunged into a crisis that wiped out trillions of dollars. The same early warning signal that appeared in 2007 has appeared again in 2025, but this time the numbers are even bigger. The $47.2 billion Chinese investors sold in Q3 2025 is not a small adjustment. It is the largest quarterly sell-off since the US government began keeping track more than 25 years ago. It is a record-breaking exit, something that has never happened at this scale. And what makes it even more interesting is where the money went. According to international gold market data, Chinese investors bought nearly the same amount, around $47 billion in physical gold, during the same period. The amount sold from US stocks almost perfectly matches the amount invested in gold. That is not a coincidence. That is a coordinated move. This isn't happening because a few rich people felt like buying gold bars. This is happening because the wealthiest, most informed individuals in China see something coming. These individuals run giant companies. They control global supply chains. They own manufacturing plants, tech firms, shipping companies, and financial networks. They see information that ordinary investors simply do not have access to. They see global patterns months before anyone else. Some of the biggest names in China have already made massive shifts. Pony Ma, one of the most powerful figures in the tech world, cut half of his exposure to US stocks and moved more than $2 billion into gold. Jack Ma sold large positions in Amazon and Meta, shifting nearly $1 billion into physical gold. Wang Jianlin liquidated everything he held in the American markets and placed nearly $2 billion into gold stored overseas. These decisions were not made randomly. They were made with intention. These billionaires are not emotional investors. They don't chase hype. They wait, they watch, and they act early. To understand why this is happening, you need to look beyond the stock market and into something much bigger, the structure of the global economy. For decades, Chinese factories have produced a massive share of the world's goods. When anything in the global economy slows down, China sees it first. It's like they get a preview of the economic future before anyone else. Back in 2006, Chinese factories started receiving fewer orders from American companies. Those early drops in demand signaled that trouble was coming for the US economy, long before numbers showed up in official reports. Chinese billionaires saw those early signals and quietly moved their money. 18 months later, the US housing market collapsed. Now, in 2025, the same early warnings have appeared again. This time, the slowdown is not in real estate or consumer goods. It is in the heart of the AI industry. China manufactures many of the components used in AI systems, chips, cooling systems, high-density servers, and power units. For 3 years straight, AI orders were rising non-stop. Companies like Nvidia, Microsoft, and Google were placing massive orders. But in the third quarter of 2025, something changed. For the first time since the AI boom began in 2022, orders started to decline. According to industry data within China, AI-related chip orders dropped by more than 20% in Q3 2025. That may not sound dramatic, but it is the kind of signal that Chinese manufacturers take very seriously. They saw it in 2006 with housing. They are seeing it again now with AI. But this slowdown is only one reason Chinese billionaires are running from U.S. assets. The second reason is America's debt problem. The United States now owes over $35 trillion. The debt-to-GDP ratio is around 130%. Historically, countries that reach these levels enter dangerous territory. When Japan crossed similar numbers, its economy entered decades of stagnation. When Greece crossed similar numbers, it entered a financial crisis that almost destroyed Europe. The US is now sitting in a zone that every economist considers extremely risky. Wealthy investors know that large debt makes a country fragile. It only takes one shock, a market crash, a political crisis, or a drop in demand to trigger much larger problems. Another issue is geopolitical risk. Over the past few years, the United States has frozen hundreds of billions of dollars of foreign assets, especially from countries it sees as rivals. Chinese billionaires know this. They know that if political tensions escalate, the US could freeze or restrict Chinese-owned assets. So what are they doing? They're re-pulling their money out of the United States and moving it into gold, stored in places where the US government has no control. This is not because they expect war. It is because they understand risk. They understand history. Wealthy people always protect their wealth before a crisis, not after. And there is another major global shift happening quietly. The dominance of the US dollar is slowly weakening. The dollar is still the world's strongest currency, but its share of global reserves has been declining steadily. More countries are trading without using the dollar. More central banks are buying gold instead of buying US bonds. Nations like China, India, Russia, Turkey, Poland, Brazil, and even Saudi Arabia have increased their gold reserves. BRICS nations are building new systems that reduce dependence on the dollar. Chinese investors are watching all this, and they are not waiting for the shift to finish. They are positioning themselves at the beginning of the transition. So the question becomes, why gold? Why not crypto? Why not real estate? Why not cash? The answer is simple. Gold has one unique quality that no other asset has. It has no counterparty risk. That means its value does not depend on any government, any company, any bank, or any financial system. It is pure metal. It has been used as a store of value for thousands of years. When currencies collapse, gold remains. When empires fall, gold remains. When stock markets crash, gold remains. It is the one asset that has survived every crisis in human history. During the 2008 crisis, gold doubled in value after the crash. During the 2020 crash, gold rose while the stock market fell. During inflation waves in the 1970s, gold skyrocketed. Chinese billionaires know this, and they also know that if a recession or financial crisis comes in 2026, gold is likely to rise again. Some analysts expect gold to hit $3,500 or even $4,000 per ounce if markets crash. But what's important here is not the exact price target. What's important is who is buying. When normal investors buy gold, it doesn't mean much. When billionaires buy gold, it suggests they see something coming. And when billionaires start selling US assets on a scale not witnessed in 4 decades, it becomes a signal you cannot ignore. Financial crises often follow the same pattern. The first group to move is the informed elite, billionaires, hedge funds, institutions, and people with access to early information. They move quietly. Most people don't notice. Then months later, the second group moves: pension funds, mutual funds, and large financial institutions. Finally, the last group moves the general public. Retail investors, middle-class families. Unfortunately, this final group usually moves too late. They sell when the market has already crashed. They panic at the wrong time. They lose the most. Right now, we are still in the first phase. Only the smartest, most connected investors are moving. But once the slowdown becomes visible in America, Once earnings reports reveal lower AI demand, once the debt problem becomes impossible to ignore, once interest rates start creating pain, markets will react. And when markets react, they react suddenly. They don't fall slowly. They fall violently. Look around at what is happening right now. Tech stocks that soared during the AI boom have started showing signs of weakness. Companies are warning about slower growth. Multiple sectors are flattening. Meanwhile, Warren Buffett is holding more cash than at any other time in his career. Michael Burry has placed large bets against the market. Major hedge funds are increasing cash reserves. Central banks are buying gold at the fastest rate since the 1960s. All of these signals point in the same direction. Something is coming. Nobody knows the exact date. Nobody knows the exact shape of the crisis. But the signs are there, and the people who normally see the future first, Chinese billionaires, have already made their move. This doesn't mean you should panic. It doesn't mean the world will collapse. It doesn't mean markets will fall tomorrow. But it does mean you should pay attention. You should protect yourself before anything happens. You should think the way wealthy people think. They prepare early. They act early. They don't wait for the storm to hit before buying an umbrella. You do not need to be a billionaire to protect yourself. You just need to be early. That means reducing exposure to risky assets, holding more cash so you can buy opportunities when prices drop, adding gold before it moves higher, controlling your emotions. And most importantly, understanding that markets don't rise forever. The people who prepared before 2008 survived that crash and came out stronger. The people who ignored the warning signs lost everything. Today, you have the chance to be on the right side of history. Chinese billionaires are not running because they're afraid. They're running because they see what's coming. They always move before the crowd. The real question is whether you will move with them or wait until it's too late. If you found this information valuable, make sure you hit the subscribe button.